right. All right. Good morning. Good morning.
Good morning.
Good morning.
All right.
Good morning, everyone.
Good morning.
Good morning.
Today is just strictly, you get the chance to ask me questions, get to clear up myths and stuff like that. I want my goal, if you have not invested in commercial multifamily, or if you don't even know anything about commercial multifamily, my goal today is to clear the mindset, is to let you know that it could be done. So what prompted me to do this was when I posted that I had gone full cycle on 104 units in Augusta. And after I posted it on Facebook, I posted it on LinkedIn. And I said to myself, you know, I had over 200 and some people that were saying congratulations. And I know for a fact that some of the people didn't even know nothing about commercial multifamily. So I said, wait a minute, let me educate them to what I do, where I come from, and explain to them, you know, just some of the terms, especially what did it, and I did send out a email to each and every individual, explaining to them what full cycle meant. What if you're in commercial multifamily, you know, you probably said, why did Darryl send this to me? I already know what that means. It's just that I wanted to send it to everyone. So, and then at the same time, I also wanted to invite you to this morning so that you could get to ask me questions like, you know, where you from? How did you get started? What made you even think of this? You know, how did it even come across my mind to want to buy a complex, an apartment complex? So that's the reason why I wanted to do this morning, and also to give you the opportunity to say, well, how can I even invest in something like that if I wanted to? Because I want to change the mindset to where if one thinks they can't do this, I'm letting you know right now that you can, right? So that was the purpose for me setting this up this morning. So where am I from? I'm from Brooklyn, New York, born and raised. In Bed-Stuy. So for those who are from Brooklyn, New York, and I say Bed-Stuy, you know where I'm from. I wasn't born with a bronze, silver, gold, or platinum spoon in my mouth. Most likely it was stainless steel. All right. And so forth. So from there, let me see, I went to PS 156 in Brooklyn. That was on Liberty Avenue. I went to junior high school in Brooklyn, New York. That was IS 55. And I went to my high school career started out with Thomas Jefferson in Brooklyn. But then I transferred to Alexander Hamilton Vocational Technical because my trade at that time, I was into drafting, I was into architect, electrical, and I liked doing things like that. So that's some of my background. And then after that, let me see, I got married. I had my first child, went into the military, did 10 years in the Army. And my last duty assignment was here at Fort Dix, New Jersey. And I stayed here at Fort Dix. after I got out the military, I went to nursing school and got my license in the state of New Jersey and worked, and I specialized in pediatric burn nurse. That's what my career was, a pediatric burn nurse. While working as a pediatric burn nurse, dealing with that a lot, after a while, you got to get a break. So instead of me calming down, I hiked up and went into psychiatric nursing, where you better be prepared to fight every day when you go to work. So, but no, you don't fight really, but yeah, you do sometimes. And so I did that for a while. I did that for a long while too. Messing, dealing with psychiatric patients and stuff like that. But I used it as, I used it to offset dealing with the burned children. I needed another outlet. Okay. In other words, I needed another outlet. So a little, but so from there, what did I do? Oh yeah, it was around that time that I got out the military. I was watching this TV program, this infomercial by Carlton Sheets. Now, some of you young guys out there, young people, y'all know who no Carlton Sheets is. They go to Charmage and myself. But Carlton Sheets used to be he used to be the Robert Kiyosaki on TV. Okay, promoting his kit and all of that, and I purchased it. And after I started trying to do it, and I was and so forth, and I was like, wow, I like this here, but it was on the residential side, right? So I took his course, followed it, and then I started noticing like other courses that was coming up, and I would go to not conferences at that time, but they were like seminars and hotels and stuff, and all they talked about was fixing and flipping. And so it was then that I purchased my first property for $100. $100. It was in Chester, Pennsylvania. And if you know about Chester, then you know why I got it for $100. So that was my first property that I ever bought. And I remember going out to the property thinking that I had something, and I had a contractor. He was with me, right? And him and we standing out there looking at this property. And he looked at me and said, "You're gonna tear this down, right?" That's what he said to me. I said, "Oh, we can't." Like, he looked at me and said, "No, you're gonna have to tear that down." So that was another reason. That's how I got it for $100. But it was really from there that I wanted to get into real estate. But I knew and I learned something, because the one thing that the one thing that they always said was, make sure you go out to see the property first before you buy anything. And of course, Darryl Murphy Sr. here didn't bother to go out there to check the place out. He just went ahead and he figured, hey, $100, what am I losing? Right. So that was the first mistake that I made, and I learned from that one. But after that, I didn't want to do, I realized that really wasn't my forte. So I started becoming creative and creating my own programs. And I didn't know that what I was creating was just being a credit partner. I thought I was doing something special. So I started lending my credit out to other people so that they could, to even investors, so that they could buy properties, and then they would they would pay me on the back end. And so I figured, hey, that's going pretty good with the investors. Let me see if I can help people who want to own property or get them out of situations. And then I started setting up programs for that. I would help people who wanted to buy their first property, but they had real bad credit. So I would put my credit on the line for them. However, I wasn't putting my money on the line. So it was like, yo, you're going to have to come with the money because you're not going to stick me with this property, and you're not going to just walk away. So I started doing that, and I helped a lot of people get properties. And then I said to myself, well, now I want to see about how can I help people keep their properties and get them out of situations. That didn't work out too well. One person still walked away from the property and everything with my name on it, but the debt wasn't in my name. So I didn't lose anything. So what happened to me after that? Oh, yeah. Okay. So I'm still working as a nurse, but I'm also doing real estate. I was traveling around, closing on properties in North Carolina, South Carolina. I was down in Louisiana, but that Louisiana trip was my last. I wound up getting sick with kidney disease. And I remember that my last closing, I was sitting in the car, we were waiting for everything to clear. And I knew that I said, this is gonna be my last trip, man, because my legs were so big from all that fluid. When I got back home, I said, okay, that was it for me, and so forth. And then I'm home on dialysis, and I'm like, what am I gonna do? And I started working the phones, doing it was a company called Arise, and I was a customer service person. And I said to myself, one day I was doing that, I said, wait a minute. I said, what are you doing, man? I said, you a nurse. You way better than this. You leave this thing alone and see if and work things out. I was trying, my thing was I wanted to get back into my entrepreneurship, because even as a nurse, I worked independently. In the hospital, yeah, I was a W-2, but I also worked independently as an entrepreneur. And my mind then was even like, okay, how can I make this where I could bring more people to work with and work under me and so forth. But eventually I wound up having to stop altogether. And believe it or not, what I did while I was home laying on my back, I would get the pamphlets from the IRS and just sit down and read them. That's how bored I was. I would read the IRS pamphlets. Learned a lot about business. I learned a lot about business. I started from home. I started my own travel agency, ran it for around about good 10 years, if not longer, 10, 15 years. And then finally I said, okay, I said to my wife, I want to get back into real estate. Got my license here in the state of New Jersey. They're hanging with Keller Williams. And I started out as a residential agent. From the residential agent, I did that for 2 years. But during that second year, I started learning about commercial. Now, and I'm gonna be honest, at that time, I wasn't looking at buying commercial. I was looking at being an agent working in commercial. That means finding the buyer, finding the seller, and all of this, that, and the other. And I started talking to commercial people. And I noticed that these commercial people, they would come in the office, pick up their check, and they would leave. You didn't see them no other time. They come in the office, pick up the check, they out. So I'm trying, how did I find out about commercial? One day I was just doing some research, and I think I punched in a commercial. I was researching somehow. I had a mentor from KW, and he was talking about, and I signed up for his mentorship program, and he was talking about investing in real estate, multifamily. And he would only say 1, 2, 3, 4. He would stop right there. 1, 2, 3, 4. He would, every now and then he would say, if you go above 4, that's commercial, which we're all taught that 5 and greater is commercial. But he would only stop at 4, and he would scale up from 1 to 4. But I'm still going out finding buyers and sellers, and that was still part of the thing, right? So something in my mind just like, well, what happens after 4? Now, remember, I'm a realtor, so I knew that it was commercial, but like, why are we just stopping at 4? So through research and then I started getting very inquisitive, asking people, when the commercial guys would come in, I would talk with them like, hey, I want to get into commercial. And this one guy, he would say to me all the time, oh, it's too expensive, man. It's just too expensive. It's too expensive. And then one day he said that to me. I said, listen, did I ever tell you how much money I make? I said, I want to get into commercial. I don't care about the money. Oh, it's, CoStar is so expensive. What I did, I left it alone because it was discouraging. I didn't know who else to talk to. I left it alone. But then one day, within KW, they had a class for commercial real estate. And I took the class. And that's when I learned about 5 and greater. I was still in the mentorship program, and I was getting ready to become a teacher in KW, where I was going to start traveling around to talk at different market centers throughout the United States in KW about scaling up from 1 to 4. But when I got the hint and the taste of that 5 and greater, I left residential. I was like, yo, I took that. I found me another book. I found a book by a gentleman named Mitu Rana on, it was a straightforward instructional book about how to, what to look for in underwriting and stuff like that. Walk through every step by step. I wound up emailing the guy, and I asked the author of the book, would you be my mentor? He said, yeah, he would do it. And I was like, wow, okay. So now I had him, and I'm sitting there underwriting. I would send him to underwrite. He would review. Now you go back to my book and look at this. And sure enough, I would go back, I would make the changes. He would be like, yep, that's it. So then I said to him, I said, this would be my first time going out. Would you meet me at the property if I get this thing under contract? I said, because I don't know what the heck I'm doing. And sure enough, he said, yeah. So needless to say, I didn't get a property with him. And then one day, one of my partners in KW, he said, Darryl, he said, I got somebody. He said, somebody's coming to South Jersey RIA, and I wasn't a South Jersey RIA member yet. He said, and they're going to be talking about, because I had been running my mouth about commercial multifamily. And he said, they're going to be talking about commercial multifamily, just what you want to do. So I was like, really? I went to the RIA meeting, and the gentleman was there. He was talking about it, man. He was blowing my mind. And I was like, holy smoke, what? And he was talking about these big apartment buildings and all of this. And I'm like, what? And and I was like, yeah, this is exactly what I do. That evening, I signed up for his boot camp. Anthony Chara, I signed up for his boot camp. Took his boot camp not just one time. After I signed up, I came back and told my wife, "You're going to the boot camp." I didn't even ask her. I didn't ask her. I said, "You're going," and she. So I said, "But this is what I'll do. I'm gonna go to the boot camp first. Then I'm gonna come back, go to the boot camp with you, and then come back." And she was like, "Okay." And but I wound up going 3 times to his boot camp. That's how much I enjoyed it, and how enlightening it was. And then from there, it was actually from there that I went to my my broker, and I said, "Who's over commercial?" And they gave me the individual's name, and I met with him, and to show you how advanced I was with the combination of the boot camp and the combination of the commercial training that KW had supplied. When I got before the director, he gave me a thick packet. It was nice and thick. He said, "Okay, take this packet here and complete it and send it back to me." I took that packet home. That night, I completed that packet and sent it back to him. He looked at me, he said, "You really completed that packet?" I said, "Yes, I did." I said, "Every question." He said, "Yeah, you're in commercial." And that's how I got into commercial. Now, I still had my 1 to 4 mentor, and I was in the apartment mastery program with Anthony Chara, and I started from my first mentor, who was teaching me about 1 to 4. He had me to go out and start teaching, and he said, because he said the more you teach and the more you do, the better you're going to get, right? And so I started out there, but once I got into the commercial, really got deep into the commercial realm, my focus and education teaching started shifting to the commercial side of things. And that's where, and that's when I just really just took off in commercial multifamily. I just kept teaching. There would be times I may have 1 or 2 people coming to the class, or sometimes I wouldn't even have. I think one time I didn't even have anyone come, but I stayed. I was there faithfully all the time, and eventually it just kept growing. So that's how I got into how I got started. I'm gonna say got started into commercial multifamily, and from there it just became something that I loved, because even as a commercial realtor, I was still dabbling into retail, and I was still dabbling into industrial and stuff like that. But one morning I was walking the streets of Burlington City in New Jersey, introducing myself to the retailers there, asking them, like, how can I help them and stuff. And when I came out that last store, it was like something just came over me and said, "This is not what you want to do. Go home and get yourself set up for commercial multifamily, because that's where your heart is." And that's when I really started delving into commercial multifamily. My first property that I got under contract, the first property that I ever dealt with and got under contract was a 208 unit property, and it was in Tulsa, Oklahoma. 208 units. That was my first. Didn't close on it. I didn't close on it. We wound up backing out of the deal. But I learned a lot because I made a ton of mistakes. I'm gonna tell you, I made a ton of mistakes. But those mistakes made me want to dig even more because, you know, of course I didn't want to make those same mistakes ever again, but that's what it was, I remember I was on a podcast and they were saying, you didn't want to stop or give up after those mistakes. I was like, no, that it made, I said, by me getting the 208 under contract, just verified that this thing is possible to get done. All I needed was some guidance, right? To minimize my mistakes. I said, no, I just got greedier. Now I wanted to really do this thing, right? So, and so 208 units didn't close on it. And then after that, I think 2 years went by without me getting anything under contract. But I continued teaching and I continued getting my face out there and getting to know people. And then one day, two investors came to me and asked if I wanted to help them raise capital. And I was like, sure. And I didn't know nothing about raising capital, everybody. I was like, sure, right? But I was building my database with investors. That I was doing. But I did raise capital. That's how I got on my first deal that closed, 104 units in Augusta, Georgia. That was my first deal, and we closed. And that's the property that we went full cycle on. Held it for less than a year, sold it, executed the business plan, and investors will be doubling their money in less than a year. The second property, another set of investors came to me, asked me to raise capital, and that was 80 units in Vicksburg, Mississippi. So I have that under my belt. And then the last property, matter of fact, the last property, I think not even a year after that, matter of fact, closer, was a property in Texas. So, and with that, it was like a pool, and I got in on that. But so that's how I got started. I took 30 minutes, and I just wanted to give you a background of who I am, where I came from, how I got started. And for those that just came in, I'm from Brooklyn, New York, born and raised in Bed-Stuy. And, this is me. So what do I do? Because in my email that I sent out to everyone, I want, one of the questions was, well, what do you do? I acquire or purchase commercial properties, 1 to 300 units, $3 to $30 million. All right. 1980 to 2007 built construction. Now, if you're thinking to the new people that just came in, and I don't know who you are. I mean, when I say that, I don't know if you're in commercial or not in commercial or invest or not invest. But if you think I have $30 million in my bank, I don't have it yet. But you don't have to have $30 million to buy a $30 million building. And so the purpose for this today was, one, I want to change your mindset. If you are already an investor, then great, then it could be done. But if you're not an investor or know about commercial multifamily, then I'm here to tell you, those big apartment buildings that you drive by, after today, when you drive by them, look at them and say, I wonder who owns that, because I could just about guarantee you, it's people like me. It's people like you. It's people like each and every one of you that's here this morning, listening to my voice. You can do this. You don't have to have the money. You don't have to have the good credit. But you just need to know. You just need to network and get to know people. All right. Like I said earlier, for those that just came in, I wasn't born with a bronze, silver, gold, or platinum spoon in my mouth. My spoons and forks was stainless steel, just like yours. Now, well, some of yours probably, some of you probably do got some gold spoons, but my spoons were stainless steel, all right? And I grew up in the hood in Brooklyn, New York. So I took that time to tell a little bit about me and how I got started and how I didn't start out as no millionaire and or anything like that. But now let's take some questions from each and every one of you. Ask me questions. How did I get started? What made me do it? I don't know, whatever question that's on your mind. Because after today, I want you to look at this in a different way. I want you to look at it in a way, either one or two ways. I want you to either look at it as I want to start acquiring those buildings, or I want to start investing in those buildings, either partnering up with other investors or partnering up with me. I don't care. I just want you to do it. That's what I want. I want you to do it. I want your mindset to change. Okay. I want you to start hanging out with people that's doing what I'm doing. Find us. If you have a cell phone, you have no excuse. Now, if you have a flip phone, that may be a little difficult. But if you got a smartphone, then there's no excuse where you can't find people that's doing what I'm doing. Commercial multifamily, you got meetups, you got RIAs, you got all kinds of things. So I'm open for questions. Ask me some questions. We got a lot of time. Come on.
Hey, Darryl. So
Yeah.
what would you tell a first-time investor that's wanting to get into the business that you're getting into, but they don't know where to start?
The first thing I would tell you is get a book, right? Now, Google, you could go to Google, you could go to Amazon, Amazon Kindle, and see Google Play. Who else? Just Google commercial multifamily or how to invest in commercial multifamily, right? And I'm gonna tell you right now, a ton of books are going to come up, a lot of them. And pick a book. Matter of fact, I would tell you to pick two. Now, after you read those two, start doing what it said. Matter of fact, I'm gonna give you a recommendation. One of the books I want you to get, and no, I don't get no kickbacks from recommending a book. So no, there's no money coming to me. But it's a very good book because it's instructional. It tells you what to do, how to do it, what you need to look for. It tells you stuff like that. And this book, I think, is How to Win in Commercial Multifamily by R. Craig Coppola. R. Craig Coppola. All right. That was one of the books I read. The first book I read, you can't even get it no more. It's out of print. But I would get that one and then just get another one. Just pick another one that's in commercial multifamily. Whether if it's good or bad, it's going to be good for you because it's going to still teach you something. All right. And if you look in the chat, Alicia put the link in the chat. Thank you very much, Alicia. How to Win Commercial Real Estate. Come on, ask me some questions. That's why I'm here. I'm here to change the mindset. If your mindset is, if you're saying to yourself, I can't do that, I'm telling you, you can do that. But your mindset has to change. First of all, you can't say I can't no more. After today, there's no such thing as I can't, because I'm telling you that you can. I did it. I'm doing it. All right. I have 24 units under contract right now. 2.6 million is what it costs. I'm partnering with another team member, got 51 units, LOI is out, waiting for it to get signed. The LOI has been accepted. Okay. I think that one came in about 2.something million too. Now I don't have 2 million sitting in the bank, but we will be closing on those properties. Okay. So
Darryl, this one was.
I got one. I'm sorry. Go ahead, Lois.
Oh, okay. Sorry about that. Good morning. Darryl, I have a question because you mentioned a couple of times that a couple of investors approached you to help raise capital. What if it's the other way around? You know, we see a deal, we want to move on it, but we need investors to help us. But I need to raise the capital. What would you suggest as like a 2-point primer to reach out to those investors? You know, other than like preparing a pitch deck, what else could we do to entice investors to come in on the deal?
well, that's an excellent question, Lois. And the one thing I'm going to say is this. If you're new into this, right? The one thing I want you to do is run your mouth. If you're thinking about getting into this business, the one thing I want you to do is run your mouth. What do I mean by that? What do I mean? What do I mean when I say run your mouth? That means I want you to start talking, start telling everybody what you want to do. But you have to do it in places where investors are. So what does that mean? That means now you need to either start going to meetups. Again, take out your cell phone, you know, again, take out the little smart thing right here, right? And type in there meetup.com and look for in your area for real estate investment organizations. Some of them are free,
Okay.
right? Some of them you may have to pay for, but whatever you got to pay, I'm gonna tell you right now, it's worth it when you're trying to raise money. Now, that's for the new people, okay? Because the purpose of this, and you may hear this in real estate, don't worry about the money, just get the property, the money will come. I'm gonna tell you right now, that's a crock of baloney. All right, you can have the best property and giving off the best returns, but if an investor don't know you, you're not getting a dime. So I'm telling you, start running your mouth, go to places. Your friend base is going to change because you're going to have to start hanging out with people that think like you, that's working towards that's where you want to go, and that can help you. Because everybody can't help you. So you're gonna find yourself, your friendship base is going to shift a little bit. As a matter of fact, a whole lot, because you got to go where they are. That's that. Now, if you're already involved, in commercial and you don't have the experience of raising capital, then I would say to you, ask those who have. If you're already in the industry, you already know who's out here doing projects and who have access to money. So all you gotta do is listen, hey, and if you're already going to meetups, connect with people, connect with them. Hey, I have this investment opportunity and I need some help raising capital. Can you help me? Right? Vet them out, of course, but if you've been talking with these people for a while by going to meetups, RIAs, and conferences and seminars and all that other stuff, if you've been in communication with them, you know just who raised money and who don't. So for I'm gonna say, Lois, if you're already in this industry, and if you're already looking for opportunities and investment properties and stuff like that, then you need to just start talking to people that can help you raise the capital. Partner with them. And I'm glad she asked that question. Suppose your credit score is 210, right? Now, you know that's a bad credit score if it's 210, right? But suppose your credit score is 210, or let's just say real poor. So what do you do in a case like that? What do you do? My credit score is bad. I don't have no money, but I have a very good investment opportunity because the numbers look good. So what do I do? How do I get around that? Partner up. There you go. Partner up with someone. Remember what I said. Remember what I said. I said I used to lend my credit out, right? Oh, for new people that just came in, I used to lend my credit out when I first got into this business back in the early 90s, right? That's what I used to do. So now, yeah, so now you start meeting investors, you know who they are. Say, listen, I have this opportunity. I don't have any money, I don't have no credit, right? But I have this investment opportunity. And I want in on this. I want this deal. Will you help me? They have the experience, they got the credit, you just gonna have to continue to build that network. Now, and your first deal, yeah, you may wind up having to give away a pretty good piece of the pie because you got these people coming with their money, their experience, right? They're helping you. So yeah, you may have to give a little more of the pie away. But at least you're getting something.
Can I ask you a question, Darryl?
Yeah.
How did you get comfortable with lending your credit out? Like, how did you know you should be able to trust that this deal would work out if you used your credit?
Well, I'm glad you asked that question. You know how I knew? Because I wasn't putting up my money. If you wanted that house, remember, I said, if you wanted that house, you was putting up your money. Now, if you walk away after that, then yeah, now that house is mine. You don't put your money in it and I'm gonna keep it. Right? But I wasn't putting up my money. You're gonna put up your money. I'm putting up my credit. My credit is worth more than your money. So that's what I used to do. I'll put up my credit. You're gonna put up the money. I'm gonna make sure. Oh, and in my program, I was during that first year, I was helping you get your credit together so you could take me off of there. That's how you were putting up the money. I wasn't taking all the risk. And then I got stuck with a property. Oh no. So any other
Darryl,
questions? Yeah.
do you have a mentorship or a program that
Yeah.
you do for newbies?
Yep. I have a mentorship program where I teach underwriting and I try to keep people focused really, because some of the mistakes that I made, one of the biggest mistakes that I made as in commercial, not when I was first started out. I think some of the big mistakes that I made was jumping around. When I first took the boot camp, all I wanted was a deal. I guess that's what you call chasing the deal, right? I was chasing for a deal. So I was jumping around into all these different states. Matter of fact, I could show you my computer. I have just about every single state on my computer with cities in every state, got a whole bunch of cities in there because I was just jumping around. I was in South Dakota, North Dakota. I was in Arizona, New York. I was everywhere, man. I'm telling you, I was all over the globe. I was in places you didn't even know existed. My mentor, my coach told me, he said, as long as you keep doing that, you're not going to get a deal. He said, because you're not building a relationship. This business is about relationship building, everyone. That's all it is. Networking and building a relationship with people. Once I stopped hopping around and I focused on my markets, I had picked Phoenix, Arizona, Utah, in Texas. Phoenix got too hot. Now, first of all, I know I called off city and states. Phoenix is a market, but I said Texas and Utah, those are states. That's not really a market. So for those who may be new here, just to let y'all know, those are states. States are not markets. A market is like with that city, and then you got sub markets that's within the city. But I was focusing in Utah and Phoenix and Texas. Then Phoenix and Utah was just too hot. And when I say hot, I mean cap rate. Well, I'm gonna throw some terms out for those who don't know what I'm talking about. The purchase price for the properties for me to make a good return wasn't there in Phoenix and Utah. So I wound up pulling out of those two locations, and I just stayed in Texas. But then I started like looking in Texas, like where in the state of Texas, what markets do I want in the state of Texas? And that's when I decided to go with Houston. Now I'm gonna call out markets, but they all in the same area. So the brokers that may be in Houston, they also look on the outside. So it still stays within my parameter. But I looked at Houston, San Antonio. I'm looking right now in Houston, San Antonio, Dallas. And I do like Laredo, Killeen, Texas. I try to stay south, the midline of Texas south. So that's where I try to focus now. Did I answer that question? I think I bounced around a little bit, didn't I? Oh, okay. I saw that sometimes I get on a long wind. Any other questions? Come on.
Yeah, Darryl.
No,
Go ahead. Go ahead.
Yeah,
Who's next?
it's Gene, Darryl. First of all, thank you for your story, your service in both the military and hospitality and medical.
Oh, thank you.
Yeah, man. So you mentioned I'm just curious, you mentioned I think we talked about it, the Augusta, Georgia deal. Is that how many units was that one?
104.
104, and that was with Eric, right?
Eric Stewart?
Yeah.
No, no. That was Vicksburg, Mississippi, was Eric Stewart.
Okay. If you could share with us, I remember you just getting into those deals, and that you held them for a year and then got out of those, right?
Yeah, what happened for new people that's here, right? That's not familiar. With any business, and I want to say this too, just because we're talking about apartments, complexes, 16.5, whatever, it's a business. And if you look at it that way, you'll have a way better understanding. I'm telling you the truth. Because what comes with a business? What is it that you need from a business to run it? You need to know how much money is coming in from that business, right? How much money is going out from that business. So you're going to put together a business plan. So you some may want to, let's say you go out and buy a grocery store or a bar, right? Or a restaurant. You want to know how much money is coming in, how much money is going out. So you're going to ask for certain things like a profit and loss statement, all right? Because you want to see how much money it is. So although we're talking about apartments, I want you to look at it as a business. So to answer Gene's question, there was a business plan on what we were going to do, how much money we were going to spend, and so forth, and then how much time we was going to get done certain things. So what were the certain things? Renovating the apartments, interior, exterior, fixing the pool, we were going to go in and beautify the complex. And we did. We executed the business plan with great success to the point where we were initially going to hold the property for 3 to 5 years. Within 1 year, we exceeded the business plan, exceeded all expectations and goals to where we say, yo, let's exit out. And all investors doubled their money. And in my investments, my goal is to double your money, right? Within a 3 to 5 year period. Now, if the market is doing well and we could get you that 2x, and when I say 2x, that means double. If I could get you that within a year, 2 years, then we're gonna do it, right? Within a year, 2 years, and then we're gonna exit out and so forth. So to answer your question, Gene, we executed that business plan. The market was in our favor. Augusta, Georgia, prices are going up. I don't want to get too, I don't know how many people here may actually be in real estate and not in real estate, but the market, I'm just going to say it like this, the market was in our favor. It really helped escalate the price. I think we purchased that property, I do believe, at $50,000 a door, and we sold it at over $100 and some dollars a door.
So Darryl, I have a question. Actually, I have two questions. So the first question is, how did you get the commercial lender, like your first deal, to get that commercial lender to take a chance on you if you had no experience with commercial lending? And then my second question is, how do you build that network if your properties are out of state?
So let's take the first question, because that's the easiest one about the lender. Okay, so you don't have this, you never ran a supermarket before, right? Never ever. You never ran a bar before, never ever. So what are you going to do so that you could get that grocery store and that bar? You're going to find someone who knows how to run the grocery store and bar. Well, that's what you're going to do in an apartment in our industry. You could come to me, you could come to Gene, you could come to, you may know Aziza, you may know someone that have the experience, because it's your very first deal, and you go to them and you say, you let them know, listen, I got this property, and I need a partner because I don't have the experience. And would you partner with me to take this deal down? Right. Okay. Now, the question that this is what they're going to say to you. They're going to say to you, let me see your underwrite. Let me see your T12. Let me see your rent roll. For those of you that are new, that's never done this before, a T12 is a trailing 12 month. That is showing you what the income is and expenses is over a 12-month period. Right? Because you're looking for trends and certain things, but you'll get that, as you get deep into it, you'll know exactly what I'm talking about. And your rent roll, a rent roll is, it shows you what on the rent roll, you'll see apartments, some of them you may see apartments, but you'll see square footage, the unit type, which may be a 2-bed, 1-bath, or 2-bed, 2-bath, right? And then it's a market rent, and then you have market rent. Some of them may have market rent, but one thing you will see for sure is rent, right? And for each of the apartments, some may have names on it, some may not, but that's your rent roll. And so the person that's you're asking to partner with you, that's what he's going to say. That's what they're going to say. Let me see your underwrite. Let me see your rent roll. Let me see your T12. Oh, okay. Thank you for coming, Bernie. Yeah. So.
Okay.
Yep. Get someone that have experience.
Okay.
So everyone, I just want to say, there's no reason for you not to move forward. If you need an experienced partner, ask. If you need a money partner, ask. If you need a credit partner, ask. If you don't ask, you don't get. All right. Any other question?
Hey,
Darryl,
Darryl,
but before your first deal, I mean, it sounds like you were so prepared to find the deal. Like it seemed like that was going to be your part, but then you got that opportunity to capital raise. What was that? Is that true? And if so, what was that mindset shift? I asked that because I'm still new to the game, but about a month ago, I got an opportunity at GP spot, and it was from that capital raising perspective, and I wasn't thinking about that at all. I felt like I could do, contribute in other ways. So, what was that shift, and who did you raise from? Right, like what was the relationship there? How long had you had those relationships? Tell me get a little bit more specific with that.
Okay. So before I do, I don't I see a lot of faces here, but I don't, some people may be here for the very first time and they don't know what a GP is. Could you just tell them what a GP is?
From it's a so in an LLC you have, so the LLC, you'll buy your piece of property under a company, right? An LLC, and then in that LLC you can have silent members, which would be limited partners, or
Good.
managing members, which are general partners, GP. So your GPs and then your LPs. That's my
Okay.
brief explanation of it.
That's good. So yeah, a GP means general partner. Those are the people that's going to be managing and doing the footwork, the work to get that property to close. And then you're going to hear another term that's called LP, which is limited partner, or they may call it passive investor, right? Okay, that means that a passive, that means you invest your money, but you don't want to do the work. You just sit back. You say, hey, I'll let them do it. I'm just going to invest in the deal. Okay. So to answer your question in reference to raising capital, I want to go back and say one thing. I made a lot of mistakes early on with raising capital. One, remember, I was running my mouth, and I was running my mouth a lot, and I was teaching. So I had investors that had approached me in reference to that first deal. And they wanted to partner with me. Made a mistake there because I didn't vet them out properly. So that was one mistake. But let me get to really answering your question. To raise capital, I had already, by me being a residential agent, on the residential side, what I was doing, I was working with banks. I was working with lenders that had REOs. Those are real estate owned properties. Those are the foreclosed properties, everyone. For those who's not familiar with that term. I was working with the banks who have foreclosed on property. So I had built a database of investors. Okay. And so when I got into commercial, I had the database, and I just started educating them to me, taking that shift from residential to commercial, and those who wanted to ride with me to continue on, ride with me, and those who didn't want to, because a lot of people that was in residential, they were like, no, I'm not into commercial right now. I don't want to do that. But that's how I started building my database. Now, just because I had the database doesn't mean I was using it correctly. Of course, I wasn't keeping them up to date. Yes, I told them what I was doing, but I wasn't keeping them up to date regularly like I should have. So that sort of held me back because, and then that also I got to say this. um, when one thing that constantly stayed on my mind was, where am I getting this money from? I was like, where in the heck am I getting $3 million or $30 million? I was like, what? And and of course, everybody, my mentors, and they would say, Darryl, don't worry about the money. Don't stop worrying about the money. Just worry about the deal. Right. And I was, but I'm gonna tell you the truth. I will go to bed. I'll be like, how in the world am I going to get $30 million? But then it dawned on me, you got to start talking. You're going to have to start, making connections and stuff like that and stuff like so. So I hope I'm answering your question. As for one, I got it on my first deal. I did not have no kind of CRM. I was just using regular email, just shooting emails out. Also on my first deal, the day that I was flying to Tulsa to do the due diligence, which is due diligence, for those who don't know what that means, that's nothing but doing your home inspection. You know how you buy a home and you go through your home inspection, you get the home inspector to go out? Well, that's what it is. Only thing due diligence is, you're not going to have just that one home inspector. You're going to have a bunch of inspectors, because you're going to have they're going to be people that specialize in that area. So you're going to have your roofer come out. You're going to have your electrician come out. You're going to have your plumber come out. You're going to have your engineer come out to check the structure of the building. You're going to have a person come out to check the soil, right? To do to make sure it's not contaminated, checking for oil and stuff. So those of you who have bought a house, if you owned an oil tank on your property, then you know what I'm talking about. You had to get that person to come out from the oil company to test that soil to make sure it wasn't contaminated. And then the state of New Jersey, you had to dig up the tank, because we don't have they're getting rid of all underground tanks, right? But to answer your question, that's what I had to do in order to get capital. I had to start. My mindset had to change and stop worrying about how I'm gonna get the money, and just saying, I'm going to get the money, no problem. I'm going to talk to this person. I had to start setting goals for myself. I'm gonna talk to this person. I got to stay in contact with these people. So if you're on my, if I see some familiar faces here, so you may be getting emails from me now. You may be getting emails from me. Hey, I'm doing this or I'm doing that now. But I didn't do that in the beginning, which made it, I'm gonna tell you the truth, it made it very difficult for me to raise capital on my first capital raise. It made it sort of difficult. And I didn't have a CRM. CRM, what does that stand for? I just use the term CRM, but it's a customer related management system. But that's I didn't have a CRM. And on my first raise, I had over, I think I had over like 500 or 600 people in my database, and I didn't have a CRM. So you know what that meant, right? That means copy, paste 500 plus times each email. Man, after that, I was like, yo, I'm getting a CRM real fast. But yeah, that's what I had to do. It took me all day. And I did copy, paste, send, copy, paste, send, copy, paste, send. And I did it over 500 times.
What CRM do you recommend, if I may ask?
I use Pipeline. I like Pipeline and everything. You could customize it to the way you want and stuff like that. So yeah, customer relation management. Thank you, Gene. Because I'm gonna tell you the truth, I knew it was something like that. All I knew was something like that. I know I got a CRM, I can tell you that much, that helps me out. Yeah, I use Pipeline. It's just easier for me. To me, it's easier, and I could build it the way I want. I could isolate the way I want, stuff like that. Yeah. Any other questions?
So Chris has a question. He didn't want to
Chris?
get on camera. Yeah, my husband. So he said,
Oh.
He said, is there a formula that can be used to show the number of properties that you need before your spouse leaves their W-2?
Yeah, there is. There is. Because I sat down, I sat down and I had created something like that. I wanted to know how much money. Well, first of all, my goal. First, I set my goal, and my goal was I have to earn minimum $10,000 a month. So, and I did this as a real estate agent. That's where I did it. I did it as a real estate agent. I needed to know how many properties I had to sell, what their price point had to be in order for me to get to $10,000 a month. And I took that and I tried to take that same thing and convert it to real estate as for commercial. How many properties I had to, what size, first of all, size, the number of units and how many, but I have to find the formula. I have to find it, but yeah, I did do that in order to find it. So if someone ever asks me what's my criteria is 100 to 300 units. Okay. And the reason why is because it is between 100 and 300 units to where I can meet my goal of making $10,000, a minimum $10,000 per month. Okay. Now, your goal may not be 100 to 300 units. What you have to take into account is your age, your family. There are certain factors you need to take into account in order to get there. You may say, wow, I could do 5 units or I could do 10 units. Okay. But you have, when you sit down and factor what's coming in, you may say, that's going to take me too long. I need larger, like 50 units or 100 units. And then when you factor that in, you can say, wow, I could get there quicker if I do this. So that's the reason why. And also I'm 60 years old. I don't have time to be, I don't have time to deal with 5 units and 6 units. There's a goal I need to hit. I'm trying to prepare for my grandkids to come whenever they get here and stuff like that, and my family. So that's the reason why I from day one of me coming into a commercial multifamily, 100 to 300 units is what I looked at. I didn't look at nothing less than it. Any other question? Oh, Chris, go ahead, Chris.
Yeah, I like to say, when I was looking into reaching financial freedom, I learned from somebody like a little rule of thumb. So if I owned 100 units, just a rule of thumb, we would take $100 from each unit and times that by $100 times 100 units to give me that 10,000 that I needed, if I was making $10,000 each month on my job. So that's kind of a rule of thumb is what I did is took those, I needed 100 units to reach my my financial freedom where I could leave my job. So that's kind of what I did when I started looking into, working on my financial freedom.
There you go. Yeah, I think I think one time we were discussing it. I think Gene, didn't your formula is what?
I'm kind of jumping in and out. Sorry, I was caught up with some other stuff, but I think it's $100 a door. You can expect in cash flow, but then if you have a GP, you'll have to split that with the GP and the LP. So $100 cash flow minimum, 100 to 200, depending on, how you bought it. And then split, if it's a 60-40 split or 70-30 split to the, GPLP, and then divide that between your, the GP members as well.
Yep. Sure enough. All right. Any other questions? Any other questions? All right. Well, okay. So this is what I am going to do. I know some people probably, no, I won't do that. I was going to go from left to right and ask people if they have a question, but that's okay. For those of you, first I want to say thank you very much for coming out. I'm going to put my contact information, my email address. Oops. I'm gonna put my email address in the chat. And if anyone would like to reach out to me and ask me questions, feel free to do so. That's my email right there. And I'll be more than willing to talk with you. Yes.
You had mentioned, getting in front of and talking with other investors and sponsors. Is there a specific platform that we can do that weekly?
Oh, yeah. There's plenty of podcasts that you can listen to. You can go to meetup.com. There's a lot of meetups there. All right. I hold a meeting, not a meetup. I hold a meeting every Tuesday at 11 o'clock Eastern Standard Time. It's called Commercial Multifamily Masterminds. It's free, totally free. So if anyone would like to come, it's let me put the name in the chat so that way. And I'm also on LinkedIn if you want to connect with me. Commercial Multifamily Masterminds. Every Tuesday at 11 a.m. Eastern Time. There we go. I would love to have you. So, no other questions? I'm surprised. I thought people were going to ask about other things. But thank you all for coming. I just wanted to share my history and my story with you all. So this way you could get to know me better. And so now when you see me posting on Facebook about closing on something or under contract for something, you'll know what I'm talking about. All right. All right. Thank you all for coming. And like I said, reach out to me if you have any questions or anything. Y'all have a great Saturday. All right. No problem. Thank you.
I appreciate it.
Okay. Yep.
Thanks so much.
Hey, no problem.
Thank you, Darryl.
Thank you. Thank you.